and CEO of Where Play Games. I'm standing in for your host, Kyle Ellicott of VCTV. Wanted to make sure that you guys have a great time, and we're going to have some great panelists today. Some of you met before and seen before, and others who you haven't. Today's topic is going to be all about blockchain, fintech, payments, what's going on. You know, we saw in the news this week, Celsius has reached over $5 billion in assets. We've seen all-time new highs in Ethereum, and we've seen some pullback in Bitcoin, but then it's kind of bounced up. And we've also seen what's happening with EOS and how EOS is starting to become a better accepted protocol, particularly since they've already gone through their regulatory issues. There's a lot of things going on, and we're very excited to have everybody today. We'll go ahead and start introducing the guests. Adrian, since you're unmuted, tell us about yourself and your company and what you guys do.
Hello, everybody. Hello, Noble. Very nice to see you in this role. Hello, Maria. Thank you very much for having me here again. My name is Adrian Niculescu. By the way, we still have the Christmas lights outside, and we were joking about that. I'm involved in a few projects: CloudCoin Consortium. CloudCoin is a post-blockchain digital currency, Faster Capital, which is a Dubai-based accelerator and incubator for startups, and also I'm a mentor in Richard Branson's Virgin Startups program in UK. Happy to be here.
Awesome. Irfan, tell us a little bit about yourself, your company, your background.
Thank you, Noble, and thank you to all the panelists for this. And I'm excited to be part of this exciting topic, and also for the audience to tune in. My name is Irfan. I'm the managing director of Irfan Holdings. I chaired the single family office, but I sit on a number of venture capital funds. And specifically, my focus area is deep technology and emerging markets. So particularly, I have been fascinated by blockchain almost about a decade ago, and have been active in the space and see a lot of potential. But at the same time, I do feel that we are really the beginning of this utilization of this technology and understanding it. So happy to take a deep dive into this topic today. Thank you. Back to you, Noble.
Yeah, thanks a lot, Irfan. I'm glad to have you here. David, it's your first time on the show. Tell us a little bit about yourself, what you guys do, and some more about your company.
Sure. Thank you so much for having me, and I look forward to being hopefully a regular participant. With respect to this morning's or this afternoon's discussion, I'd like to introduce myself as David Towell. I am the president and co-founder of ProChain Capital. ProChain is a multi-asset, crypto asset focused fund. What I mean by multi-asset is we invest in crypto-related assets, both tokens and otherwise, in various forms. So we have a portion of our investment portfolio, and it is a hedge fund, excuse me. A portion of our portfolio is invested in long-biased crypto tokens. We have a portion of the fund that is invested on a trading basis on daily movement and activities relating to a number of coins. Then we invest in equities and debt of payment-related companies that are listed on stock exchanges and debt exchanges around the world, both long and short. And then finally, a portion of our portfolio is dedicated to private investments, venture capital, and otherwise. I've been invested in the space for about 4 years. My partners are Justin Litchfield and Stephen Azerbad. I've been in the investment management space as a hedge fund founder and leader for about 11 years. Prior to that, I traded distressed debt at Credit Suisse. And prior to that, I was an attorney at 2 prominent New York firms. But today's focus in terms of my involvement in the space certainly is relating to our investments in payment companies and also general outlooks on the use of crypto assets for purposes of payment.
Awesome. Glad to have you, David. Habib, glad to have you here. Tell us about yourself, your background, and your company.
Sure. Thank you, Noble. So I'm a corporate and securities partner at a small firm called BJ Kang Law. I've been working with startups and particularly blockchain companies for the last 5 years. I've had the chance to advise funds, companies, ICOs, foundations, mining companies, sort of the gamut of different types of operations related to blockchain. Have some clients with really exciting ideas and been noticing a lot more activity over the last few months. So I'm excited to share a little bit what I've been seeing.
Awesome. So, right now everyone's looking at the liquidity in FinTech and where this is going. Matrix put out a report originally for FinTech discussing how the Matrix FinTech Index, if you guys are familiar with it, and they recently have stated that there's going to be $100 billion of liquidity in 2021 when it comes to the FinTech space and how that relates to payments and processing and crypto. What are your thoughts on this, David?
Sure. So certainly there is going to be an explosive amount of capital that's directed to the space, more so than in previous years. And I think that will continue for some time because obviously it's an area that demands much more efficiency than it has today. And the digitization of both storing and transferring value is something that should be at this point in the world very natural. And so there are a lot of people that are chasing the same prize. I think after a certain point, there is going to be a massive amount of consolidation in the space. Because at the end of the day, transactional activity is finite. And it probably is, unless there is an amazing boom in, purchasing around the world, there's not going to be, many more transactions done than there are today. It's just going to be done in a different way and hopefully much more efficiently and therefore cost saving around the table. So the short answer is definitely there will be investment in the space, and thereafter definitely there will be consolidation. And then I think we'll get to a point that's pretty boring, which is, a point of plateau, which is we will be comfortable as a society transferring value, storing value digitally. And that's the way the world would continue, after that.
Irfan, what's your take on the FinTech space and this growth that everyone's talking about, and where do you see it heading in the next 5 years?
Right. So first of all, I would like to thank David. I think he just he just displayed his experience in the field and talking about what he is anticipating, and which is on point. I think the other factor that I kind of want to take a step back into it and say that why this discussion about FinTech and blockchain started in the first place in the field, and the fact that there is plenty of pain points existing, not to mention some really large financial institution being affected by financial fraud, money laundering, et cetera, et cetera. So I think the most important thing is that as David mentioned, there is a need, and there would be consolidation. But I think the need is really vast right now. Whether it is on C2C, B2C, or even B2B side of payments as well as financing, and not a single player out there are able to holistically tackle this because it's a huge problem. And at the same time, I think the other aspect of it, as I say, that I focus a lot in emerging markets, and emerging markets also play an interesting part in it. As you may know, that a lot of interesting FinTech innovation has come to us from some of the developing countries. Think about M-Pesa in Kenya, Bcash in Bangladesh, and a couple of other places. So I think the factor is that traditional financial institution has left a large part of the world, as well as a large portion of the population in emerging countries left out, which means that there is still a major need of technology as well as the financial sector to do an outreach to these places and sectors. So I do see that as, and I do agree with David that whatever investment has been made till date, it's gonna peak more as, governments across as well as players across in other markets will start, being more active in this space. The last thing I think also on blockchain, I would just add is that, blockchain, apart from, there has been a lot of misconception around it. Still, there's a lack of understanding around this area, whether it's blockchain, whether it's crypto, et cetera, et cetera. And it always very often gets associated with, a lot of the negative things versus the positive things. So, but now I think, some, leading nations, so for example, the US, some other parts of the world will take, some major steps, which will also provide clarity to governments across the rest of the world, where, in certain places, for example, in India and other, where, this kind of trading would be considered illegal, right? I mean, but it's going to change because, everybody looks for, somebody who's going to take the leadership role and kind of like legitimize the process. So I think, it's going to be a hot new decade for fintech and blockchain.
Awesome. No, good points, Irfan. Habib, what's your perspective on where things are going in this $100 billion in liquidity, and will it increase? Where are we at?
Sorry about that. Sure. I think David and Irfan, really kind of hit the nail on the head. A lot of money coming in right now, consolidation later. I think if I'm going to add anything, it will be there's a lot of money coming into the private space, a lot of ideas, obviously. Most of my clients aren't, I won't say most, hopefully none of them are watching, but some of them won't be around in 2-3 years, right? That's just the reality of how this works. I think one big player that we're going to see come in that might, kind of eliminate a lot of these fintech companies that are coming in right now are going to be the central governments. I think we don't really know yet what's going to happen when the government gets into the business of centralized digital currency. What does that do to a lot of these fintech companies? How do they play in to that new reality? I've been talking, one of my clients recently handed over control of his company to join Amazon in their centralized digital currency team. And, a lot of other companies, a lot of consulting firms, some of the big four are getting into this business. Hong Kong, I believe it was, or Singapore that recently had a bid that, between Coinbase, R3, Consensus R3, and one other consulting firm, people are advising there. So I think honestly that 100 billion might be, a few times that over the next few years because of what these governments are going to be putting into place. And I'm really interested in seeing if, the digital currency kind of comes in and just upsets this whole fintech balance. I'd love to hear some of the other panelists' thoughts on that.
Yeah, Adrian, what's your take on it and how the government plays and what their ideas are when it comes to fintech as well as blockchain?
First, I would like to point a concern regarding what is a commodity and what is a differentiation factor in fintech, because I'm looking at the UK market. Most of the fintech companies, they do the same thing. They issue a card, they have an app, and that's it. Small variations of the same thing. And I'm involved as an advisor in a neobank, a new project called GregFins, which is pretty complex and is building a product with a hardware component, which is pretty different than anything else. And I believe that it's very important for all projects to find a way to differentiate themselves and to go out from the commodity space, because at the end of the day, if you are talking about an app, there is limited space on phone screens for the numbers of apps you are using, right? Mm-hmm. Same with the cards. And regarding the governments, it's a normal step, I would say, for the governments to start issuing national digital currencies, involving in even in the fintech space, probably sooner or later the crypto space, until a certain level will be regulated. Of course, will be very weird, for example, to go to your bank and to cash out the bitcoins from your savings account, and the volatility now and the emergent aspect of this industry is very nice, and it's a roller coaster, but it's a beautiful roller coaster because, and I believe the CEO of Binance posted the tweet like 2 weeks ago. Mm-hmm. Sometimes in the future, the Bitcoin price will be like that, you know, mm-hmm. like
stabilized.
Exactly. So we enjoy the volatility, and of course, the most important thing, especially about the crypto, because now I'm showing that the fintech companies, they go a lot into crypto, and it's normal because the distance between them is very small, so it's non-existent sometimes. And I always say there isn't any problem. Let's say Bitcoin will be $20,000 tomorrow. The biggest problem is and the biggest risk is if your funds will be stolen, either from an inside job from the founders of a project where you are storing them, or a developer who's upset about the project and he's breaking the smart contract. I don't know. Apart from that, we love the volatility. It's a market with a huge potential of growth. I'm talking both about fintech and crypto, and it's a freaking never-ending learning curve. But we have to love that, you know?
No, yeah, I get it, Adrian. So I mean, that's worthwhile to kind of mention or talk about, though, right? You know, where does security fit in this fintech conversation? It's easy when we look at being able to transfer money. We do have an underrepresented group in Africa, and Africa is one of the most explosive places. We have underrepresented groups across the world. We're just unbanked, right? But how do you deal with the security when individuals are in control of both their public and private keys, and almost have to kind of trust the people behind the scenes? You know, David hit a great point. Eventually, the market will consolidate. But you know, we're going through this. We went through the same thing when MasterCard, Visa, Diners Club, Discover Guard all popped up. Those were the original fintech companies when credit was accessible and people were literally, companies are printing money out of thin air so people could buy fraud stuff. So now we're in this another wave of fintech, and it seems that it's just difficult for scalability when it comes to security. So, you know, Habib, what are your thoughts when we're looking at the security of both the blockchain and fintech, and how people can kind of ramp on? How does that evolve? Where do we go from here? Because it doesn't seem easy in that component of it. You're muted.
You'd think I would be used to this now after a year. So I think one of the things is, a lot of the companies I've worked with and what we've seen happen over the past few years is a lot of hacks, for example, in exchanges and different things. They haven't been large institutional players that have been generally involved in this. And not to say that large institutional players aren't subject to the same security breaches, but I think one of the things that's been missing are sort of specialized cybersecurity partnerships and integrations that play into this and allow for more security. I think we're going to see that a lot more. So some of these blockchain-focused companies are really, shining these last couple of years. They're coming more into the light, so to speak, right? Interacting the traditional infrastructure as far as fintech goes, expanding their consumer base. And with that, I think you're going to see, and I'll say on my end, I have seen a rise of companies that are specifically geared towards assessing or addressing some of these cybersecurity concerns there. My firm's out in DC, so we see a lot of work in the cybersecurity space, and a lot of the companies that had traditionally built out various things within the context of traditional fintech, traditional finance infrastructure, and for government, you see pivoting some of these same things to address what the blockchain industry has been seeing. And as there's more money in it, as unfortunately, it's tied to the price of a few cryptos, suddenly entrepreneurs are flesh, The founders of a lot of these companies are flesh. They have a lot of money. They're willing to spend a little more to maintain that security, I think.
Irfan, what's your perspective on it? You guys are knee deep in dealing with it. What do you imagine the security component is going to look like, and what concerns you in the space?
I think, all great points, told by Habib, Adrian. And I think, so I think let's take a step back, right? I mean, and again, the role of the government, right? I mean, government has played role in terms of shaping fintech, but how much has it been successful till date? We're not really sure. I personally have been involved with an initiative from the Monetary Authority of Singapore, which was fairly considered a successful, move compared to a lot of the governments who conducted, fintech or blockchain innovation harnessing kind of campaign. But a lot of others, you've heard, sandboxes being created, etc., which hasn't been that successful. In fact, there has been also allegations that came out from some of those, initiatives. And separately also, I think within the corporate player, as Habib just mentioned, about the large players. I mean, large players are trying to get involved, but I think, it's a very, how to say, defensive approach. They are out there to protect their business. They want to stifle innovation. They want to have the innovation just within themselves. I personally don't think incumbents would be able to disrupt themselves. You can create as many innovation hub under your, corporate building. It doesn't work that way. I just don't believe that. And most importantly, as you can see, some of, as we have latest, what we have seen is the fallout between Visa's takeover of Play, and which was, and see the main thing again, and Habib, did mention that security is a very important aspect of it. I mean, the market, there are a lot of good things, but market is also very speculative at this point. I mean, it's a very interesting time for short sellers to be in this industry. To be honest, but and see, no universal standards are there, which creates a problem. What Adrian just mentioned, that a lot of players are offering the same solution, but it's not necessarily a solution because it's a solution in the surface, because financial industry is so complex. It can go deep, as we have already noticed with large financial institutional players who's been playing for hundreds of years. Even they have been affected, because even though knowing the ins and outs of the industry. So what that means is that, there are also, bad actors in this space. And it's very important because, apart from, what we always say about illegal, etc., you also have to remember that there has been a plenty of bad actors in the financial space, but now they have taken to the internet. And now they have also, they are also utilizing fintech and blockchain services. So, and this is a disaster kind of like waiting to happen. My personal problem essentially with this entire approach, that government in general has been taking a back step. They're trying to play catch up for a long time. And I personally have consulted a lot of governments to date on this particular area. And I think playing catch up is not the way to do this. You really need to take a deep dive into this, whether it is the regulatory aspect of it, whether it is the how to allow innovation from the upstarts versus the incumbents, and how to allow the consumers to benefit from that. Because at the end of the day, you know, the technology could benefit businesses, countries, people, the consumers, right? So that's
no,
kind
you're
of like
right.
my high level take there.
No, it's a good point. You know, and you know, you started at the top of the hour, Adrian, talking about your deep concerns on what went on with the recent, I guess, essentially theft. You know, what was your take on what was happening and how, you know, how that was done, and what changed in your mind for fintech and blockchain?
I didn't understand the question.
No, you were telling, yeah, when we started, you were talking about the
Yeah.
Telegram and how they stole the funds and the like. And so explain a little bit about that and how that made you look at things a little bit differently.
How I do things, both with cryptos and with stocks. If I want to look at at a project, but I don't want to invest a lot in it, I put a small amount of money to be able to have that in my account. So to follow the price, I go to the Telegram group and remain a member. And yesterday I saw a token, which was a DeFi token, which was for about a few months between $15 and $20, and it was $2. So I said, what happened? I went to the Telegram group. Craziness that one of the developers actually stole the funds, and I don't know, they were left with like a few Ethereums, like something like that. And this is something which when people, this is the legend, when people look at smart contracts, and this is the marketing thing, they are promoted like unbreakable. If it's a smart contract, it's like a Godzilla, you know, which can't be brought down. And people don't necessarily the due diligence, but they don't they don't make an effort to understand what is a smart contract, which are the flows of these systems. You know, there are so many projects which are built on Tron. I'm looking at them because I'm on many marketers' email lists, or MLMs, or projects which are 100% Ponzi's, and people are flocking like crazy, putting money in those projects without understanding the risk. So the market has to be more educated. This is one thing, and a little bit of regulation will be good, because the bad actors will not be able to do what they are doing today. And this is an unfortunate thing.
And I know a little bit about, you know, I've had my books translated into Romanian. I spent a lot of time in Romania, and there was a whole entire ban on multi-level marketing programs in Romania for years. There's probably still on the books as far as I know it, because of past Ponzi schemes that have popped up in Romania. So it's crazy when you see these things and people not being educated. David,
everybody wants, sorry, just to finish the idea, everybody wants to make a lot of money from today to tomorrow without any work, right? And this will be a legend 1,000 years from now. So that's it.
So David, you brought up an interesting point. You said, look, there's eventually going to be one or two key players in the marketplace, and everyone else is going to fall under. And Adrian talked about, and everyone talked about it, that everyone's kind of creating lookalike projects. My question to you, particularly with your hedge fund, we know that Square and PayPal have got all the infrastructure, all the security. They already are willing to take crypto. They're already in the step. Could Square and PayPal be the next Visa and MasterCard? Are those the companies we should be looking at? Or is it some companies that we haven't seen yet that are fast on their heels? Because Square and PayPal have the stores, they've got the customer base, they have all the people, and now they've gone ahead and added it on. So what's your take on Square and PayPal and how they've evolved into the fintech space? You're on mute.
Sorry about that. So first off, thank you for making the point. I appreciate it. To go back to one of the things that I started out with when discussing my fund, I said that it's a multi-asset fund and that we invest not only in tokens and projects on a VC basis, but also in equity and debt of companies involved in the payment space. And we've actually been long PayPal and Square for quite some time. And I think a lot of crypto focused funds that are just crypto, are not able to do that. They don't have the flexibility to do that. So, to me, at least right now, those are the two best horses in the public markets sphere to go ahead and take advantage. Now, they have, let's call it unlimited amounts of capital, but this is not their only focus in terms of business. And so if tomorrow Visa or MasterCard or Chase or other financials decide to get into the game and put an unlimited amount of capital, so now it's just a question of talent in terms of, because the playing field's even, they all have an unlimited amount of capital. Who's going to hire the best people, best professionals in order to go ahead and win the race? Now, on the other hand, the talent might not be attractable to any of those companies. Maybe it's an entrepreneur that frankly doesn't want to be tied down by any institution. And so, the bottom line is certainly that Square and PayPal have the ability. There are certainly many other established players that have the ability because of the amount of capital that they have or have access to. But there's certainly, other places that may have the talent for reasons that, are explainable by someone wanting total independence or running a project or being a crazy person and not being managed by anybody else. And so, the ability to invest across structures in terms of technicals, as opposed to being tied down by those technicals and ignoring fundamentals and being able, therefore, based on fundamentals, investing, in public market equity or in VC-based, activities or in crypto projects that are somewhat public, but not listed on an exchange, therein lies the ability. And so that goes back to Adrian's point of being able to go ahead and diversify your bets, unless you're incredibly convicted, to go ahead and just place your bet on one or two horses, I think is the wrong way to play this game because it's such a long game to play. And I think everybody will agree, today may be, Bitcoin being the most popular, the most well-recognized, the most, highly invested, coin out there, but none of us can say for certain that 5 and certainly not 10 years from now, that it will continue to have the same standing. You're on mute, Noble. Back at you.
Yeah, one of the issues that people continue to forget is that Bitcoin is Gen 1 of the DLT technology. We had Bitcoin, which got the idea of just passing ones and zeros. Then we have Ethereum, which added more to the idea of the smart contract. And then we have EOS, which eliminates the idea of gas because it does CPUs and RAM, and there's no gas as an issue. So the biggest question I have going forward to you guys is, what should we be looking down the pipeline by this year, by the end of the year? What's the next phase, or where's the next bump going to come from? And David, you kind of started. What are you guys looking under your investment thesis now that we're into 2021? That may not be the next Bitcoin. Where are you guys looking as the opportunities?
So obviously, we're looking at adoption as being the most important factor, right? Regulatory issues are important. I'm a lawyer. Infrastructure issues are important. But frankly, to me, it's all about momentum and adoption when it comes to digitization of things. And what gets adopted and what doesn't is not necessarily the best mousetrap that's out there. It just, it's just a happenstance type of thing sometimes that, it's the best marketing or the thing that's taken up most quickly by some important people in the space, and therefore, other people go ahead and follow. But to go back to an earlier point that I'd like to comment on, we're actually looking very closely at the security part of the entire ecosystem. I think that it's a boring part of the ecosystem, and it's not going to be the one that gets the most fanfare. But as was talked about earlier, security is going to become even more and more important. It'll adapt, certainly, and it'll need to be there, certainly. And the biggest players are going to invest heavily into it because nobody wants to become the next Equifax data leak, excuse me. And no one wants to be hacked in a massive way and have hundreds of millions, billions of dollars transferred out of people's accounts. And as technology has adapted in terms of payments, and those companies, Visa, MasterCard, American Express, all have massive security protocols. And I think that that's going to be a huge part of spending budgets. It's not going to be human beings anymore. It's not going to be ledgers that are kept, internally, but there's going to be a huge amount of spending on security. And so that's where we're looking for the most interesting development, where people are not particularly looking. It's not the sexiest place, but it's certainly going to be a place where it's going to be required to put an enormous amount of capital. And there, it's less about adoption. There, it's about who does it best, who is the most secure platform. And I think, for us, that is going to be a focus, not only for the next year, but I'd say for the next 3 to 4 years, looking for the best player or players, in that space.
Nice. Irfan, you're nodding your head a lot with what David was saying. Is that the same thing with your holding company? Are you guys looking in that same space, or what do you guys see that is right for your thesis as well?
Yeah, no, thanks, Noble. And you were muted for a while, so back at you again. But yeah, I agree with David. So one point that I just wanted to mention, and I always heard that the smartest people are always looking into places where nobody else is looking. So kudos to you, David. And again, as I said, that I have been in this space for almost a decade, and particularly by background, I'm also an engineer. So essentially, I think the key is that I wasn't here for the fanfare. I did see there is a need, there is a problem, and this technology has the potential to make an impact there. And traditionally speaking, my role has always been in the larger, greater, tech industry, mainly in the enterprise side of things. So I do focus on the enterprise area. So basically B2B area, because again, there's plenty to do. And I also do feel that, between businesses, there are certain parameters and metrics, which right now, specifically in this industry, which you can call the gold rush or the Wild West, may be exposed to in the consumer side, is much lesser when it comes to the enterprise side. I wouldn't say that it's negligent, but it's there, but it's not the same, and it functions in a different way. And also, as Adrian was mentioning, DeFi, I'm gonna be cautious about the DeFi right now because I've been through that ICO time, right, which was a big, there was a whole scene around it. So we might very soon, right now is the golden days, right? So let it just go to May. We're probably gonna start hearing a lot of these stories, and has the potential to become another, DeFi has the potential to become another scandal again. So what I would say that yes, we look into the technology more as more than what it is and how it's developed. I think you mentioned this just a while back, that we are in the early stages of this industry and this technology, which is 1.0. We still have a long way to go. And at the same time, I'm not trying to be Bill Ackman over here. This is not, don't want to have another Valiant over here. So I'm not trying to score a home run with one investment option. So I'm trying to place my bets, in different spaces, which makes sense essentially in an ecosystem that also kind of like resonates with David beyond the blockchain industry also, because this is sort of like a small puzzle in a small piece in a big puzzle. So yeah, back to you, Noble.
No, the great Irfan, that's a great final thought. And where can people get a hold of you, or how can people reach you?
Thanks, Noble. And again, thank you so much for to all the panelists and the audience tuning in. You can reach me through Twitter at Sempar Irfan or through LinkedIn as Sheikh Mohammed Irfan. Yeah, I'm pretty responsive in both those places. Thank you very much.
Awesome. Adrian, your final thought on the topic and where can people reach you and get a hold of you?
My final thought, with so many cryptos, there isn't one coin which is worldwide adopted. Still, this space is not filled by any coin. So will be filled in the next future. Hopefully Cloud Coin will be that. Nobody knows. But still, after 8,000 to 9,000 coins at least known by the humankind, none of them is widely adopted. I can be found on LinkedIn, and of course I have other social media channels, but that one is my main communication hub. Thank you very much to VCTV, to LATOKEN for this educational project, which is pretty important, and I'm very happy to be part of it and can't wait to come back to the family because it's a family gathering right now.
Good to see you, Adrian. Habib, your final thoughts on the subject and where can people find you and hire you for your services?
Sure. So, final thoughts. I think consolidation is inevitable. I'm not going to pretend to know how the crypto market space, works. Right now, there's just far too many players, though, for it to be sustainable long term. I think on the FinTech side, the DeFi side, that's an interesting question. Yeah, you're looking at consolidation, perhaps. Yes. I imagine a lot of these companies are going to be bought up by, the people you mentioned, Square, PayPal, these people that might not be nimble enough right now to do some of the things the startups are doing. If you have the money, you can find ways to be nimble. And I think we'll see some of that. But I imagine, similar to the way in which right now we have a lot of e-commerce options, right? I mean, there's a couple of big ones. Yes, most of us are going to go to Amazon, but there's a few different things out there, different niches that people go to, different ones for different countries. I think that's, what we're going to start to see emerge as well. And people have projects looking for advice. They can contact me on LinkedIn. Always happy to talk.
Awesome. And David, any final thoughts and where can people get a hold of you and your fun?
Sure. So I can be reached at David at ProChainCap, ProChainCap.com, David at ProChainCap.com. And in terms of final thoughts, I'm going to pull back for a second and say, look, the space is certainly not a fad. It's been absolutely proven. I'm sure everybody on this, on this webinar, I'm preaching to the choir. But I totally think that this is revolutionary. It's going to unfold over the next number of years. An enormous amount of money is going to go into it. And like everything else, you really got to be in it to win it. And I don't think there's anybody that can call, a particular winner. And so I think it's really important to be involved all around the sector, do your homework. But at the same time, you can't ignore it. You got to be invested.
Awesome. Well, thank you to Maria, Kyle, and the entire LATOKEN team. We appreciate it. If you ever want to see us, we got tons of stuff on VCTV. You can come back. If you'd like to be a panelist, always reach out to Kyle and Maria. And thanks a lot for your time today. And hopefully you guys had a lot of education, a lot of learning. And make sure you reach out to everybody on the panel. Give your thumbs up if you like what you saw today. And anytime, come on back. And I think there's going to be a panel right after this. So enjoy the rest of your day, guys. And it's good to be with you. Have a great day.